Welcome to Sifter Funds monthly review. In this presentation, we will cover three topics. First, the fund performance. Second, the biggest contributors and detractors during the month of May. And finally, we will introduce you one Sifter company we have been invested in. The fund share price has increased quite rapidly in the first months of the year. However, in May, we saw the first slightly negative month. Since the beginning of the year, the fund has returned 13.9% after all fees, and in May, the fund decreased by 0.15%. It's good to note that the fund is not managed against any selected benchmark, but we can still compare it to the market returns. In this case, the MSCI All-Country Weighted Index. As we can see, the Sifter Fund has outperformed the market by 3%. Let's review the fund's top contributors and detractors during May. The top contributors of the fund companies were Novo Nordisk, Autoliv and Texas Instruments. Novo is a Danish pharmaceutical company that is the market leader in diabetic drugs. Demand for the drugs is growing steadily year after year. Autoliv is a company whose main products are in passive safety, such as airbags and seatbelts. The opening of the economy and the expected growth in demand for new cars will, of course, also increase the demand for highly critical safety devices. Texas Instruments is one of Sifter's investments in the semiconductor industry, and industrial customers are one of the biggest customer segments for Texas. The share price got a bit of a headwind due to the much-talked semiconductor shortage. Correspondingly, the largest declines in share price were seen in three companies: Disco Corporation, Nitori Holdings, and Deutsche Börse. Disco is a Japanese semiconductor industry equipment manufacturer, and in May we saw that the share price consolidated slightly after last year's strong rally. However, demand for the company's equipment is expected to grow to the new records in this year. Nitori is sometimes called an IKEA of Japan, and it is the newest addition to our portfolio. Despite the small decline in the share price, Nitori's business is on a growth path, and we believe that the company's fundamentals are very strong. In our view, these changes in share prices in a short term do not give us any reason to make changes in Sifter portfolio. The business outlook of all these companies are on fairly solid footing, and we still believe they will succeed in the future. Next, we will take a closer look at one of the largest investments in Sifter portfolio, named Verisign. Please, Alexander.
Thank you, Santeri. My name is Alexander, and now I will present to you one very interesting case that we here at Sifter Fund has been invested in for quite some time. Now, this is a company with perhaps the biggest competitive advantage that I have ever personally seen, because this company is essentially operating a legal monopoly. Now, the business in question is the American company Verisign. And Verisign has a very simple business model. They operate a top-level domain name business. More specifically, they own the rights to sell the .com and the .net domain names, among a few other minor ones as well. The way this basically works in practice is when you type an address into your web browser, your computer will contact the Verisign name server and return to you the actual IP address, so that your computer knows which server to talk to. And for this service, and for the right to use the .com domain name, this company charges an annual fee of about $8 per year per customer. And even better, due to a recent agreement with the regulatory authorities, this business now has the right to raise prices on this service by up to 7% per year. This business is really amazing. It's very lucrative and very easy to run. The revenues are steadily increasing every year as the number of websites in the world are growing, historically at a rate of 3 to 5% per year. And the cost of running this business is almost nothing, because this company basically sells an intangible product, the .com brand, if you will. So you can almost say that the main expense of this business is to print out and send out the invoices to the customer once a year. Not really, but it's a simplification. Naturally then, this leads to really amazing financial ratios, like the gross margin of 85% and the net profit margin of 50%. You can compare this number to the average profitability of the S&P 500 companies, which typically average around 9 to 10%. So this company is between 5 to 10 times more lucrative. It's a really good business. Now, did you know that there are about 150 million websites in the world using the .com domain name? Did you also know that the second largest domain name in the world, .cn, the Chinese national brand, only has about 25 million domain names, so about 6 times less? Naturally then, the .com has a massive competitive advantage. It is also very well known around the world, and it's seen as a trusted domain. Furthermore, it's actually one of the cheapest domain names, only costing about $8 per year. Now, this $8 is a really small part of the budget required to run a website. Typically, these cost ranges from a few $100 to a few $1,000. Therefore, the customers are not really that concerned about this small $8 price, nor does the customer care about any potential price increases. So essentially then, this company is running a monopoly, right? Surely there are other domain names out there, but the majority of the websites in the world are, as we know, .coms. And Verisign's right to this brand, if you will, is guaranteed both by the US Department of Commerce and ICANN, which is an American non-profit company in charge of the entire internet backend infrastructure. Our investment hypothesis for this company is very simple. We believe that the number of websites in the world will continue to grow at a rate of 2 to 3% over the next several years. And we also know that this company has the right to increase prices by 7% per year, per the agreements, right? So we can conclude then that this business will grow the top line by at least 10% per year for every year over the next 5 years. And on top of this, because this company only has fixed costs that do not grow at the same rate, we can assume that the net profit margin will grow even faster than the revenues. So it's quite obvious then that we have been very happy long-term investors into this company since we first invested in September of 2016. During this time, the stock has appreciated by at least 190%, or, if you will, annualized 25%. This has drastically outperformed any other alternative investments, for example, global equity indices, which has only appreciated by roughly 80%. So to summarize this, we can say that Verisign is indeed a quality company. It has a very strong monopolistic market position. It has enough pricing power to greatly increase revenues and profit over the next 5 years and even beyond that. Thank you so much for listening.